Some of the newer members and long-term member Martin have asked me to make a video going into more detail and explaining how this pattern works. You will see this pattern, now that you know it, on all time frames. However, I only trade them from 4 hour and upwards. The longer the time frame, as with all things to do with Forex, the more likely the move. Now, of course, this is technical analysis. It may or may not work. We are looking for probability. But the principle is as follows. On this move, you can see we clearly have a high point here. This is known as the head. You have a shoulder down here, the left shoulder, and we have a right shoulder. And as long as the head is not breached, i.e. this shoulder could come all the way up here, it can still be classed as a valid head and shoulders pattern. We then need to look for the neckline. Now in this particular case I was looking potentially 12800, or you can sometimes look at a diagonal line. As it is on this occasion, this is the pair of both in the same area, so therefore that is fine for me. The way that you use a head and shoulders pattern is as follows. You calculate from the neckline, so let's take the bottom neckline, calculate from the neckline to the head, and the middle figure there, 740 odd, ignore the fourth final digits because this is a 5-digit platform, but around 730 pips has been the movement between the low of the head and the neckline. The theory goes that should price break and close below the neckline, that move should be replicated in a move down after the breakout. And on this Euro USD on a weekly, that spookily would take us back down around 120, the recent low. How you trade this movement is you must wait for a break and close of the neckline, and therefore on this Euro USD you would be looking for a clear break and close below 12800 and then a pullback with a view to a potential short. So that's it. It's very simple and very straightforward. Now that you know what you're looking for, you will see them all over the place. One other thing to note is you also can have what's known as an inverted head and shoulders pattern. Now, I'm not very good at spotting these usually, but this one was an easy one because it's opposite of the Swissy, and as you know, due to correlation, when the Euro USD is going down, the Swissy is going up and vice versa. This then is an inverted head and shoulders. You have the head, you have the left shoulder, the right shoulder, and on this occasion the neckline has already broken, and therefore if you're looking for a potential trade on this one, you will be looking for a pullback to that neckline. We've had now the break and close, and this break and close was on a weekly chart, so therefore anywhere around 95.80 on this pair would be technically the area to enter for a long from the head and shoulders pattern. On this particular instance, the potential move is a lot smaller, anywhere around 200 odd pips, so 200 odd pips would take you up around 9700. But that is the principle. Have a look, see if you can see them, and as I said, you will see them on all time frames scattered around all of the pairs. Catch you later.